Let's start.
Good evening, ladies and gentlemen. It's indeed my proud privilege to welcome you to another great event this evening. We are indeed blessed to have one of the outstanding speakers, outstanding professionals. Before I come to him and who will be introduced by the chairman for the session this evening. Before that, let me also tell you, warmly welcome all the viewers who have joined us live on our YouTube, Facebook, Twitter, LinkedIn, and also on Zoom. As usual, if you have any questions, please put your question in the chat box. The speaker and chairman have kindly agreed to respond to all your questions. Please address your question relevant to the theme of the discussion this evening. We'll appreciate your support in this regard. All others who are watching the program live on other social media portals, please put your questions. The WhatsApp number which is on your screen, send it to us. Our team will collate and compile all the questions and put it to the chairman and the speaker for this day. Coming to this evening, regarding other events, there are so many events happening. I don't take the time, log into our website, you will know, and don't miss. All the events are really outstanding. I urge upon you to log into the quiz program, which we are bringing out here every morning. During the lockdown, we thought we must keep you engaged from morning till late in the evening. We are bringing out number of events for you, starting with a quiz in the morning, which will be really a brain twister. Do join, win some attractive prizes, and then the 14 days continuous good performance, and all the answers will also be available on our website. Similarly, a lot of other events which also we brought to you. Now, coming to today's evening, again, we are indeed blessed and privileged to really host one of the outstanding achiever, Zeroda, no impediments, a journey into the fabulous success of India's foremost fintech startup. And we are indeed happy and delighted, Mr. Nithin, you accepted our invitation to join us this evening. Large number of viewers, invitees are eagerly looking forward to hearing your conversation with Shankar. Is another gem in the crown of our team, and also done some phenomenal work. Let me have the privilege of introducing Mr. Shankar. Shankar is the founder of CAMS, director of ACSYS Investments Pvt Limited, and he's a graduate of IIM Madras and IIM IT Madras and IIM Calcutta. And he founded computer camps in the year mutual fund industry. And he's also involved in several organizations and promote entrepreneurship. One such organization, besides his alma mater, and one such organization is MMA, and he's been a great source of support to us, not only in promoting entrepreneurship, in terms of supporting MMA in its CSR initiative. And we're doing some phenomenal work for school children, number of schools. And thank you, Shankar, for your continued support and always handholding MMA in its initiatives and endeavors, which you have been able to successful. Over to you, Mr. Shankar, to introduce the speaker and the subject and the theme. Mr. Shankar.
Thank you, Vijay. I want to add my welcome to everybody who has logged in and presumably who will log in the minutes to come. See, Nithin is actually synonymous with Zeroda. I cannot introduce him without talking about Zeroda and vice versa. He is notionally a graduate of the Bangalore Institute of Technology, but I don't want to introduce him as an engineer. He's actually a technologist trader, if I can use that hyphenated term. And he started as that. He has now morphed into really creating an ecosystem for investing. And he's the architect of what I believe to be India's finest investing ecosystem. I don't use those words lightly. And it's one of India's finest fintech companies. I am carefully using the word finest and not largest, because he certainly isn't the largest, but he's the finest, because what he is doing and what his team is doing is coming from a place of passion. It is not coming necessarily from a place of commerce. I'm sure commerce has a place to play in it as well, but he's driven basically by passion. And you know, if I don't know if how many of you are familiar with his writings, with the writings of his colleagues, the blogs that he posts, very interesting, very thought-provoking articles. If you just went through them for half a day, then you would entirely agree with me that what he's doing is driven by passion and not necessarily by commerce. And I will allude to all of them in the course of this discussion. Zerodha has repeatedly been awarded top honors. The most recent of them is the ET Startup of the Year 2020. Congratulations, Nithin. Congratulations to everybody at Zerodha. Zerodha, to me, demonstrates the very essence of entrepreneurship. Why so? They have a tremendous focus on customer experience. If you look at each of the, we think of Zerodha as being a broking platform, but it isn't. It is actually an entire ecosystem of products that supports all types of and all activities of active investors. So there is an entire focus on meeting customer needs, excellent customer experience, very responsive websites. Their focus is on market expansion rather than replacing, an existing supplier in the market. And their attitude towards capital efficiency is exactly what it should be. I think I come from the old school. I believe capital is something to be used with care and not to be thrown around. And that is exactly what they have done. The name is somewhat misleading. It gives you the impression that Zeroda got where it got to because of pricing. Nothing could be farther from the truth. As I said, it is the ecosystem approach and the enormous attention to customer needs that has really got them to where it has. And the name is actually zero plus Rodha. Rodha in Sanskrit is impediments. Thereby, no impediments. They do not want to place, they want to remove all impediments that existed at one point in the life of the investor. And they are doing that in a very aggressive manner. We are really privileged to have Nithin with us. Nithin, welcome. I want to extend this welcome to you on behalf of MMA, on behalf of the entire board of MMA, and we are grateful to you truly that you took the time off. It is a busy time for you. I think that all the things that we can't do offline, we end up doing online. So I'm sure you're seeing many times the volume that you saw at the same time 2 years ago. And I know that you're supposed to work only till 6 p.m. So thank you for that as well. As always, we will spend the next half an hour or 45 minutes in conversation with Nithin. And after that, we'll move over to the Q&A section. So Nithin, as I said, welcome to this fireside. It is a day certainly for me to remember for a long time. And I love your company because in many ways, you're doing all the things that I aspired to do in my early days. If I read your blogs, if I read your Kailash's blogs, the approach that you have towards application, infrastructure, funding, all of it very closely mirrors the ideas that I had at that point in time. Of course, you've done it on a far bigger scale and in a far more impactful manner. So I really love what you're doing. Now, I want to go back to that first introduction that I made. People think that Zeroda is basically a broking platform, which is true, of course, but it is not the full truth. But you are actually a large ecosystem. And as I look at your timeline, I see that various services and various products have come online at various points in time. Everybody thinks that, this ecosystem is some guy waking up one day and imagining bits and pieces all over the place and then suddenly implementing it. The truth need not necessarily be that. You may arrive at the market needs as you get experience and so on. So I really want you to walk me through this journey, what you started with and where you ended up and all the steps in between and what made you take each of these steps.
Thanks, thanks Shankar for that very nice introduction. I mean, we have looked up to CAMS, and I've been trading the markets from the late 90s. So I've always looked up to CAMS and you. So it's nice to be getting interviewed by you for this. And I think, you kind of summarized the whole thing really, really well. One of the best summaries I think we've had introducing Zeroda to an audience. So you're absolutely right. As in, we do broking, but we are not really a broking firm. I mean, that's how we think about the business as well. Now, I'd be lying if I said all of this was planned from day one. It wasn't. Things evolved, we adapted. And I think one of the things that we've done well as a business is we've adapted quite fast. As in when we grew, we learned where the opportunities are. We were quick to adapt. And I think one of the reasons for us to be able to quickly adapt was also the organizational structure, right? We are still a bootstrap business. So we don't have any professional investors. So which meant that, all the decisions that we could take in the last 10, 11 years, there weren't, we did what was right for the customer, right? And at every point of time. And of course, what's right for the business as well. But then we did it, keeping the customer in mind. So 2010, when we started with Zeroda, I think, I used to trade the markets very actively. My younger brother had joined me in 2006. So he was a better trader than I was. So we decided that he continues trading and I give a shot at broking business. And this was in 2009, 2010. The reason for that idea to come about was because the National Stock Exchange had launched a free trading platform for brokers. So it was called NSE Now. So if you're a broker, you got a free trading platform. And that's when the idea came that, if a trading platform is coming for free, can you go disrupt on pricing, right? In India, brokers were still charging a percentage brokerage fees, and it didn't make any sense for in an online world to be charging a percentage commission, right? So we said we will charge a flat fees per trade, uh, and the ambitions when we started in 2010 was just to cater to very active traders. We used to be very active F&O traders. I used to be very active in a lot of online forums, talking and sharing about markets. So we were trying to just build a very broking platform for very active traders, and on back of a vendor platform. So there was, I get sometimes called a technologist. I really am not. I'm more a business guy. All the technology is thanks to Kailash, who heads our tech. But 2010 we started the business. Around 2013 is when, I think 2012 is when I kind of realized that this business has a potential to grow big, right? If you were to ask me, when we started the business, if we had gotten to 1 lakh customers, I would have been like, dude, we are set for lifetimes. So there wasn't very large ambitions. And maybe one of the reasons why we were not able to go and get VC money in the start, right? Because the ambitions weren't there. And maybe, it was also the wrong time to be doing broking business. 2010 was probably the worst year for brokerage as an industry historically. So around 2012, 13 is when it kind of realized that, we can go and build a large business, and not just for active traders, active F&O traders or intraday traders, but also for investors and all of that. And we knew that that can't be done on the back of, vendor platforms. You can't go to a third party platform, white label it. There is no moat to be able to do it. So the first 3 years, it was completely white label platform. And the other thing that we did very differently was, which we don't get credit for, was as much credit for, is that actually we brought in a lot of transparency to the industry, right? In broking, or actually in any banking or broking, the deals offered to you is based on the net worth, right? I mean, you walk into a bank, based on your net worth, your bank manager offers you deals, right? So we said, as Zeroda, we said, you know what, we will not change our offering for any customer, irrespective of how much revenue he generates or how rich he is, right? We said we will treat everyone alike. Now, in the bargain, the leverage we got by doing that was that we could now be transparent. So for the first time, we started blogging. I put my head on the table in all the online forums possible, as as a CEO of a business and of a broking business, and completely answering transparently. And Indian broking industry, I don't think until then had ever seen something like that, right? Because everything was very opaque in the way the business operated. So I think what we disrupted really when we started was more transparency and not really pricing, because there were already brokers who were charging whatever we were charging. So we were not really the lowest costing broker on day one as well, right? So around 2013, we is when Kailash joined us. And around him is our tech journey started, right? So which is, we kind of, Kailash is a proper monster. I mean, I think he's the best technologist I've seen in my life. The way I met him also was very, serendipity kind of thing. So there was this company called Sensible where he was a co-founder. I was bankrolling that startup and it didn't fly. And me and him hit off, and then I convinced him, saying, you know what, there is a mother of all bull markets waiting to happen in India. Why don't you come join? Let's build this together. We need help in terms of technology, and our ideas matched quite a bit, right? So he joined in 2013, and around him we started building our products. So 2015 is when we launched our first in-house trading app called Kite, which is our web and mobile platform. I think one of the best things we did with the launch of the platform was that we actually launched the API ecosystem, which powers the trading platform before the trading platform itself. Right? So we launched this thing called as Kite Connect APIs. So Kite, the web and mobile app, are two apps on top of this API ecosystem, right? And so
your app uses your APIs.
Yeah, so that's how it's built, right? So and actually not just Kite, web, mobile, even Coin, all are internal apps, right? They're all almost like apps on top of this underlying
Absolutely.
API ecosystem. And so yeah, so we call that that ecosystem as Kite Connect. Anyways, in 2015 we launched Kite. I think the big challenge for us with Kite was you had to keep it simple, minimalistic, good looking, but you also had to give all the bells and whistles your active traders required, right? Because active traders, require all charts and open quest analysis and all of that. So that was a complex piece of the building the Kite web and mobile app. But we launched this in 2015. 2015 December, we also went zero brokerage for equity investing. What was happening for us as a business was we were getting white label. I mean, we were getting whitewashed as one of those. You use Zeroda only for active trading. If you want to invest, use ICSA, HDFC. Right? We wanted to change the image of that for the business. So we thought, why not let go of completely brokerage charges for equity investing? Because anyways, we were not making too much money from equity investing trades. So that worked really well for us. The virality hit for the first time. And people came in, they liked the new user experience. They started inviting people. Then Aadhaar happened. Aadhaar and this demonetization and online onboarding, because the biggest roadblock for us in this whole journey was onboarding a customer. And once it became online, so 2016 when we went live with Aadhaar, we were at 100,000 customer. We are at 5.5 million almost today, right? So it's actually grown 55 folds in the last 4 or 5 years as compared to the first 5 or 6 years. So that happened. The other thing that suddenly opened up was, we realized that this API ecosystem that we built is very valuable for other startups to come build on top of us, right? So by then we had also realized that India doesn't require another buy sell trading platform. We had already attempted to solve for the education piece using Varsity, which is our education initiative. Probably the second or third largest in the world on capital markets today. So we were trying to solve for education. We were trying to solve for a trading platform, but we realized that what probably stockbroking requires, or growing the capital market ecosystem in India requires a niche user experience and not another trading platform. So we opened up this API ecosystem and we invited startups. Now for the startups, firstly, they didn't have to do the dirty job of building all these plumbing lines between exchanges and all of that, right? Second, they didn't have to worry about regulations, compliance, and all of that. Third, very quick go-to-market types, so you didn't have to wait for the infra to be ready and etc. But fourth, the most important part was that we said, if you build a good product, we will showcase it to our customers, right? Because in the business of money, validating the product is really, really tough, right? So the first startup we met was this company called Small Case, who's done really well now. And so when we met them, we also realized maybe there's an investing opportunity, So we started this thing called Rain Matter, which is like a fintech fund incubator, and we started investing between $250,000 to $500,000 because by then we're profitable as a business into these companies. So Rain Matter happened in 2017. Direct mutual funds on exchange platforms got introduced. We never, while we could have sold mutual funds for the first 7 years of a business, we didn't, because the regular mutual funds didn't fit in well with the theme of the business, right? This is not going well with this whole transparency and all of that, right? Because you made money from the manufacturer. So 2017 we launched Coin, which is today probably the largest direct mutual fund platform in the country by AUM. And then the products kept getting better. We've always constantly, like Kite is actually the third version of the Kite platform today. When I say third version, it's completely built grounds up 3 times over. And then 2020 happened, COVID happened. I mean, weirdly, the business suddenly grew like we were at 2 million customers, and it's now at 5.5 million customers. So it's just it's kind of blown out of proportion over the last 1 year or so. And so that's generally been the journey, and
that's a fascinating journey. But lest we give the impression to non-entrepreneurs that it's all a bed of roses everywhere, surely here and there must have been some hairy situations.
Well, I mean, there have been many such situations. There have been. I don't think there's anything rosy on this on this planet, right? In this, at least in the business of entrepreneurship. I think for us, I think for me, the toughest pieces of my journey was actually pre-Zeroda than post-Zeroda. As in, I used to be a trader. I've blown up couple of times. I worked in a call center for 3-4 years. So I've done all of that, before Zeroda. So post Zeroda actually seems like a rosy drive because, the worst.
Yeah, it's all falling into place.
Yeah,
beautifully.
And
So see, in one of your blogs, I was looking at your outlook on third-party investors, on funding.
Right.
And perhaps amongst large organizations, yours and Sridhar Vimbu's are the only two that I can think of who remain bootstrapped at scale.
Right.
And you have made very cogent and strong remarks, strong reasons for being what you are now. And I totally empathize with them. But if for a moment you look at the other end, the valuation end of it, at one stage in life, if you decide to list or something, do you think that migrating from a hope and glory sort of valuation to a proper, fundamental based valuation based on revenues, profits, etc., it always seems to me like it's a step down for some strange reason.
Right.
So you would probably be valued lesser than a company who's losing 1,000 crores a year today.
Right.
Does that faze you at all?
No, I mean, the thing is, like, money has really never been the focus right from the start of this business, right? As in, if it was, we would have raised money long time back. I mean, it's kind of ridiculous the kind of valuations that we've been offered over the last 1 year, right?
Yeah.
And like, if you can ask the biggest, they are like the biggest VCs and Ps in the world. Yeah. And they all like, dude, I don't think there's another guy on this planet who would say no to this kind of money, is what they're doing, right? So no, I don't think for us it ever was about money. Now the thing is, if we were to list for some reason, right, I think the market forces will automatically move our valuations to wherever, one of these newer internet-based valuations. I mean, like, so I know we could list it, say, 15 times earnings, right? But then, because there are competitors who are getting, like, for example, Robinhood is just done a large US broker, right? As in, it was very similar to us in terms of our product and etc. is valued at $60 billion, right? So someone's gonna get up and say, what, if Robinhood was valued at this, maybe Zeroda should be valued at this, and then the prices will adjust automatically, right? So and as long, I think the valuations has kind of moved away from, the way people value businesses has moved away from this price to earnings to, I think today's VCs that I know, they just care about growth and nothing else, right? As in, no profit, that doesn't matter. It's about growth and just being being in the top 1 or 2 of the particular vertical, right?
Yeah.
And as long as
parse that thought, I'm going to come back to that later in the discussion because that's very interesting. I felt that too. I want to spend a minute on your technology stacks, right? Yeah. You're right. Kailash has got his head on his shoulders, very straight, and for infra at scale, he's doing a fantastic job. Right. And if you say that a running application has been rebuilt 3 times ground up, hats off to that. I think I know how difficult it is to transit from one to another running application. And you are big votaries of FOS, free and open source software, right? One, do you ever have any form of pushback from the regulatory environment of the sort of software that you're using on the fact that you're not using branded software, so to speak, right, on the governance surrounding systems and so on, that it should follow a certain methodology and not necessarily what you think is best for it? Do you ever have any pushback?
No, not really. I mean, so we've actually had, we sit on a bunch of committees with the regulator and exchanges and etc. So we've actually said, why FOS is actually better, right? As in, a black box where you don't know where, what can go wrong versus something that is being, used by so many people and issues getting reported is a lot better than using a black box, So, we've spoken to exchanges, regulators many times, and there's never been a pushback. We have actually almost nudging them to start thinking about FOS there as well. So.
That will be a change. What I find impressive is that the ownership of technology is strategic for you. It is not, some CTO out there doing something, comes up and says, okay, I need a budget for so many crores, you sanction it, and then he does something. It's not that at all. It is a totally strategic ownership. The people who look at technology, who make decisions about technology are right at the top, starting from ownership level. And I think that comes through in the products that you. So what is your system for taking user inputs and incorporating them into your products? How do you do that?
Yeah. So the thing is, we don't really have all of these product managers and all of that, so so I work closely with a team, we call it a Z team within the office. There are like 15 young boys and girls who understand markets well and who are constantly getting feedback from all different places, and they kind of put up these bunch of suggestions saying these are the directions, etc. So we sit and debate for a while, and post that, I usually end up taking it to Kailash and the tech team, and then we sit and talk about it, saying, is it worth doing or not doing, or where in our roadmap should this be, and that's it. I mean, that's how simple it is. So there isn't like, just to give you an example, Coin, which is probably the largest direct mutual fund platform in this country, was built by 2 people on the tech team and is being run by a 4-member team. Right? It manages a 15,000 crore AUM today. So
I'm sure Star MF and others would be interested to know these numbers.
Yeah. No, I mean, in the sense, so we've always, I think the first few years of a business, we understood the importance of not having technical debt, right? And all these, dependencies on vendor platforms. So today, almost every single thing in our business is owned by us, right? And like even our internal communication also, we have a really popular, internally we discuss like a Slack types, right? We have a discourse instance that completely false again. Right? We have invested in a company called ERP Next from Rainmatter, and ERP Next is FOSS, and it runs all our back office platforms, right? As in our emails, for example, Kailash has actually open sourced this utility. It's called ListMonk, essentially like Mailchimp types, right? So we send between, I think, for 10 to 20 million emails a month, and we spend something like $20 to do it, right? So like if you were to go use Mailchimp, you'll probably spend like like ₹1 crore a year just to be sending your emails, right? So it's and it's a 30-member tech team, a 34-member tech team today. So I mean, and not a single person on the tech team has quit us till date.
Amazing.
Right.
Amazing.
So
tell me, Rain Matters is looking more and more interesting. Do you take outside LPs into Rain Matters? A lot of people on this call would be interested.
No, we don't. Because the way, like, if you were to ask any of the Rain Matter startups, our investments are done for impact and not really for any ROI in terms of. So all our investments are like, dude, what's the impact you can create? And today we have actually extended that to Rain Matter Climate, through which we are investing into climate change startups. And again, we're like, we don't care anything about the returns in investment. Anyways, this money is being done out of like, there is no objective, because as soon as you start taking outside money, then you have to worry about return of capital and all of that.
This is like CSR part 2 for you.
CSR, essentially.
Tell me about it is always perceived that broking is a risky business, right? Every now and then you hear about somebody going belly up, not able to manage such settlement, and some client did something, etc. Is there risk in the business, and how do you manage it?
Yeah. No, I mean, see, the thing is, the risk in the broking business is based on how much you give leverage. Right? The more leverage you give to your customer, the higher the risk you're taking as a broking firm. So right from day one of the business, actually one of the other reasons for Zeroda to start was SEBI in 2009, after this whole financial crisis, introduced this short margin penalties, right? So they said every broker has to collect this much margin from the customer. If he's not collecting this much margin for the trade, there will be a penalty applicable for tomorrow, right? So that's when it kind of hit on me that, it's a level playing field, right? A broker can't compete with you based on leverage, right? Because if he could compete with you in terms of leverage, Zeroda would not have made any sense to do it, right? Because, active traders would have just gone to the person who gives more leverage. Right? So for us, the big trigger to start the business was that, it's almost like, how in last business in NBFC, your 50% haircut is mandatory for everyone, like that, right? So that no one can actually leverage more than 2 times on last anymore, right? So
what about risk with the platform and the infra and so on? Because once in a while you hear about, even NSE has broken down a couple of times. HDFC Bank has broken down.
Correct, yeah. No, I mean, it is. And at our scale, it's just, I mean, the bad mouth, it's like ask me, right, what is not the thorny parts of my journey has been times when there has been issues with the platform. And no tech platform can be up all the time, right? And for us, because most of our audience are the 20 to 35-year-old, who are very active on social media. If even if something were to, like even if you're down for 1 minute, we are trending on Twitter, and it's quite chaotic. So the risk in terms of technology, see, thankfully that risk, is, as a broker, you're ring fenced from that risk, because a client, when he's onboarding, he signs a document with saying that he understands that a tech as a platform can have it. Because otherwise no broking business in the world can take a tech risk and run. So but there is another issue, right, which is the futures and options business. And the futures and options business in India is like, if you look at exchange turnover today, 95 to 97% of the turnover is from futures and options, right? And in futures and options, people, inherently are leveraged, right? If you're buying Nifty futures, you're paying 1.5 lakh rupees to buy 7 lakh rupees worth of Nifty futures, or, buy a short or whatever, right? So tomorrow morning, assuming North Korea decided to fire a nuclear, weapon, brokers can have an issue, right? So right from day one of the business, we've been earmarking, we've been taking out funds from our profits, saying, you know what, this is for that black swan day.
Right.
And we need to take this out and keep it aside.
Right.
Because, a broker, every, like how in 2008, there were 2 days when the markets fell 20% each on 2 days, and a lot of brokers were out of money, right? We know that somewhere
one day it'll happen.
It'll happen. But thanks to SEBI has just been extremely proactive over the last 4 or 5 years, right? I mean, the kind of regulations they've brought in is just phenomenal, right? And they've reduced the risks in the industry to significant margin. But that said, tomorrow morning could be that day where market falls 30%, 40%. And if it were to fall 30, 40%, every broker is going to be out of money, right? As in, from his pocket. Thankfully, we've built a decent amount of corpus today. So, to be able to take, those hits, right? But I keep telling this to our team, saying that, what, we should just keep 10% of all our profits. Think of it as an insurance policy, because one day it's going to come back. I don't know when, it could be 2020, it could be 2025, right? But one day it's going to come back. We just have to be prepared for it. So.
Absolutely. I want to talk about, you're a market participant also. I want to talk about some things, some trends in the markets of late. And the first of them, I want to talk about crypto.
Right.
Rather, I want to talk about blockchain and 2 applications sitting on it. Crypto, which is a very hot topic in India now. Somehow governments have taken radically opposing views on crypto for some strange reason. And I want your view on what is good for India, one. And I also want to talk about non-fungible tokens, which is another application sitting on top of Ethereum. And is that ending up creating a new investment asset class, or is it a fad that will go away over time, whatever? Just your views on these 2.
Got it. Yeah. No, I mean, see, the thing is, for a while, almost every event I used to get asked, do you use blockchain, AI, etc. At Zeroda, we use none, right? As in, we haven't found a use case for, blockchain or AI or whatever, right? So the only place where we use a little bit of AI is during our IPV process, right? For image recognition. So we have not built it ourselves. Amazon has this thing called as recognition, which is an AI piece. So if you want to match your photo on your PAN card, so Aadhaar copy to your photo on this thing, you can do it very well. So about crypto as a use case, I've never really understood why the world needs what crypto is, and I've known some of the biggest investors in crypto businesses, right from 2014-15. I've missed out on maybe like a phenomenal return that I could have made by investing in some of these exchanges and even the crypto assets. But the thing is, I could never really understand crypto as an asset class personally, right? As an I'm still don't know what is it.
True, I accept, and for the same reason, I'm not an investor in art, for example, or antique cars or whatever, because I don't understand those asset classes.
Correct.
I can't for the hell of me understand what people see in one piece of art as opposed to another piece of art, and so on. But does that make the asset class bad in itself? If there's a bunch of guys who want to invest in it and who see value in it, what's wrong in that?
No, absolutely. There's nothing. No. So if SEBI had allowed Zeroda to SEBI RBI had allowed Zeroda to offer crypto to our customers, we would have done it. Right? I mean, there is, if the people want to do it.
You have a position on the ongoing debate about whether crypto should be allowed in India or not, at a legislative level.
Correct. No, I think it should be allowed, but I think there has to be some checks and balances. It can't be allowed the way it is right now. It's just, I mean, I think there are a few coins which are proper Ponzi schemes.
Correct,
They're proper,
correct. That's true.
pump and dump schemes, and
That's true.
right. So there has to be some checks and balances. But the problem is, who puts checks and balances, and how do you regulate this?
Yeah.
It's almost impossible to regulate. I mean, crypto, right? As in, you can, of course, regulate money going from your bank to a crypto exchange. But once it goes there, how do you, right? It can go from one wallet to another wallet to another wallet to, somewhere else. So it's so I don't know. I mean, I think every regulator around the world is probably thinking about it now, as in how do they regulate it, right? Because once they, but I think once it's regulated, if crypto as an asset class is becoming bigger by the day, I think Indians should have access to it, because not giving access to something which is growing year on year, and Indians missing out, I don't think is also right. So it's a very tricky kind of a place to be.
And what about non-fungible tokens? A piece of art that is represented by a,
I think this is heights of like maybe I don't get, maybe I'm old school, right? As in, because
you are old school. What about us?
I don't know. I mean, I still can't make sense of it. So I think it is. I think what's happening right now is, especially in the last 1 year, with all the money that the US government has given to folks in the US, they're just so
putting it somewhere.
They're just finding newer and different kind of ways for the money to go out to. So no, I can't make any sense of it at all.
So the point that you made about all the money that is being printed brings me to another point, which is that market listed stock valuations. So listed stock valuations, I really can't understand. I mean, there was a time when you could apply some rationality to it and say, if the company is like this, then this is the expected valuation, therefore it's overvalued. Yeah. And at some point it will correct, etc., etc. But all that has gone out of the window. Looks like almost like listed company valuations are mirroring private equity valuations. In the sense that there's money, there is stock, and I'll just buy it regardless of the price. It's almost that now. What is your view?
No, my personal view is, I don't think we should be looking at stock markets going up. I think we should be looking at more as the value of money going down.
You're right, you are.
So I don't think markets are really going up. It's just, all the money, extra money in the ecosystem is really, the value of money is depreciating really, really fast. Right. And which is artificially making everything else seem like it's going up. Like everything. I was just reading about palm oil. I mean, all edible oils are up 100% in the last 1 year. Right? And especially at a time when, the economic activities is
so subdued.
So it is crypto, the way crypto assets are going up. I mean, real estate in US, Florida is at all-time highs, New York's at some areas in New York. So all of this essentially, I don't think is the actually asset prices going up. It's really the value of money, because otherwise you can't really, you can't really justify why else at the current economic situation, stock market should be wherever it is.
Absolutely. I think that's a very nice way of looking at it, which I had not. I'm sure a lot of people here are looking at it with new eyes now. Tell me a little bit about Zeroda going forward. I know that you are slowly entering into manufacturing, creeping into it, so to speak. I think small case is a sort of proxy entry into manufacturing. I think that you're planning to launch an AMC as well. Maybe it's already underway. So clearly, you are moving into manufacturing from purely being an intermediary of sorts. Is there anything beyond that as well? Are you planning a fund-based activity? Are you planning an entry to the payment space and so on?
Not really. I mean, I think we've found our hole, which is capital markets. So we intend to go as deep as possible, and because, like, personally, one of the things I've always believed is that the odds of succeeding is higher around your core competencies.
Yeah.
And you can't just go pick up random businesses and build just because you feel like building it. And for us, a natural extension would have been lending, but personally, I don't enjoy lending, because I'm very anti-capitalistic in that way, that I feel that people shouldn't borrow for things that they don't want. So it is. I mean, they don't need. Sorry, but while
I think this is the benefit of not having an investor. Absolutely. I think that you're your own sovereign, and you can make all these decisions for yourself.
Yeah. So during the course of Zeroda, right? So when we started the business, like I said earlier, right, it was about building something for very active traders. Yeah. Then it became education with Varsity, which is kind of, teach people about markets. Then it became all these niche user experiences to grow the capital market ecosystem. But the thing is, I think one thing one thing that keeps bugging me is that we aren't really, in all of this, we aren't really helping a person do better with his money, right? Of course, we help him save costs, we give great user experience, but is he really doing better with his money just because he's getting, a better platform or a lower cost? Not really, and that's something that we've always constantly been thinking about over the last 2-3 years, especially after us doing quite well as a business, right? As in, and we've been trying to think of what possibly could be the answer for this. And so we've thought about this platform called Nudge, right? Which is like a user experience layer on top of Kite, the web and mobile app. And so the thing is, I think to invest and trade better, right, you have to, more than really picking up the right stock, I think it's about following like these 5-6 very basic risk management rules well, right? Which is, don't go against the trend, don't put all your eggs in one basket. If you're going against the trend, maybe bet size, do it small and stuff like that. Right? If you follow these 5-6 things right, I think your odds of winning goes up exponentially, right?
But then again, not just targeting active traders or active investors, if you want to use that term. Because
even the passive guys, anyone who invests, like just to give an example, last, when this whole Yes Bank debacle was happening, right? The most held stock at Zeroda was Yes Bank, and all by passive guys.
Wow.
Right? So it wasn't active, intraday traders buying Yes Bank. It was actually people who very passive, right? As in coming and buying it and then averaging it down and then averaging it down, then getting influenced by this whole disposition bias, selling their profitable holdings, buying more of Yes Bank, right? So, so the thing is, the way we are thinking of it is, for example, we're about to, last year we launched this thing called penny stock nudge, which scares, like if you want to buy penny stock, we scare you away from buying penny stocks. But the next few things that we are doing is actually quite cool, right? So one is around portfolio concentration, etc. So if you're buying too much of a certain stock or sector,
does that drill into mutual funds also? Does it integrate coin? And it does.
It does. So and the thing is, what we realize is the only place to capture the attention of the customer is in the order path, right? From the time he decides to buy a stock to the time he places a buy button, you really have only that much time where you can actually teach him something, right? Post-trade, pre-trade, you can do whatever, it doesn't matter, right? People don't have attention spans to actually read anything, right? But this few seconds that you get, right, you can actually teach a lot of stuff to the customer, right? And like penny stock trading volumes is percentage of our equity trading volumes is down by 70-75% after that nudge, right? So
wow.
Can you kind of nudge these people to do the right things? So yeah, that's really our next big thing. Right now we are working on this thing called tags. So while buying order, we are trying to ask him, dude, why are you buying the order? Like, why are you placing this order? Is it gut based? Is it based on newspaper? Is it based on advisor? So can you quickly tag in the order path, right? So what we can then do is we can give you a P&L of all your tags, right? Tell you which,
that's a great idea. That's a great idea.
Right? As in your gut worked or your friend worked or your advisor worked.
I think these little things differentiate you massively from everybody else who offers sort of similar services.
No, and the thing is, the idea is willingness to say no to business, right? As in, like, just like saying that, what, you as my customer is more important than the revenue you generate. Just being able to say that keeps us very different to, I think.
Tell me, you have seen growth in multiple dimensions, right? The volume itself has grown exponentially. The number of products you have on offer, and each one of them must be massively subscribed. As you said, Coin is the largest direct distributor. What is your time? Where does your time get expended in? Where do you focus your time? Has your engagement with the business changed in any qualitative way in the last 2-3 years, perhaps? And how?
I think one of the best things I did in this journey was to stay away from the tech team. I did that thing in 2015 because until 2015, 2016, I used to sit with the tech team and try to influence them. And one day, me and Kailash were having a discussion saying, and he was, he was very brutally honest with me saying, dude, you know what, we're going to keep playing this ping pong game, so the product's not going to go forward. So let's change. So, so I think that was like not interfering with tech team was probably the right thing for a business guy to do. I think today most of my time really goes in figuring out what's the next thing to do, and take inputs from customer. I still spend 1 or 2 hours every day answering people's queries on different forums. It's just it kind of gives you a pulse of what's happening in the market. And
I must tell you that the few messages that I've sent you, few emails, I have always received a response within 10 minutes. I find it amazing with the volume of mail that you have, you still find the time to respond to 10 minutes. So I appreciate that.
Yeah, no, I mean, for me, if there's any email pending in my inbox, it's I find it time to sleep. So.
I agree. So, as I said, in more ways than one, there is a similarity that I see. Anyway, 45 minutes and the gong has rung. So, I want to ask you this one last question.
Okay.
Nithin Kamath, the person. Other than business, what are you? Tell us all the facets of Nithin Kamath other than the business phase that we've seen so far.
Yeah. No, I mean, I'm a big sports.
What do you like to do? How do you cool off?
Yeah. No, I mean, I'm a big sports buff, so I've played different kind of sports through my life. I used to play a lot of basketball, and I love my swimming and cycling. So I've done a bunch of long rides. I love music, so I play a little bit of guitar. So my youngest, my son plays the drums, so we play together. So that's,
what do you listen to mainly?
Everything. I mean, everything from Kishore Kumar to Pink Floyd to my mom's a Carnatic musician, so to Carnatic music. So it's so everything. It doesn't really matter. But personally, I'm right now trying to pick up Western classical guitar over the last 1 year, and because all this time in the house, I need to do something which is a little different. My wife
after 6 p.m. every day also now going forward, right?
No, that's 6 p.m. is for the team. If only CEOs of businesses.
Just pulling your leg. Yeah. So thank you, Nithin. This was an outstanding. I wish, as I said, I could speak to you for another hour, another 2 hours, but Mr. Vijay Kumar is already looking at me a little angrily, so I'll hand over to him.
No, please go ahead. It's like watching
you ask the questions if
movie.
there's time after that. No, you ask the questions. If there's time after that, we'll cut it.
Yes. So there are a couple of questions which has come in the chat box. You want me to take them also, Mr. Shankar?
Yes, please.
Okay, thank you. Thanks, Nithin. It's been like watching a thriller movie, actually. We have been eagerly looking forward. Being an armed forces guy, we're not that much good in trading, but we get scared. Why should we do and what we have got? So great. And we also like to have the feedback of the thing. Anybody, please, the feedback on your screen, keep bringing that, and we'll move on to the Q&A session. I'll take some of the questions which has already come in the chat box. We also got a lot of questions on the YouTube and Facebook, which I will also read it out. The first question what has come in the chat box has been, your tech team has been stable and no one has quit. You mentioned your presentation. What do you do so special as a tech team is usually very volatile and they always look for opportunity outside? The question from Mr. Somu Chokalingam, which has come on the chat box.
Yeah. No, see, the thing is, as a not just tech team, even our core business team, the first 100 people who joined us are still with us. So maybe 2 or 3 have left over the last 10 years of the business. So I think it's just the way it's just a freedom people have in the business. It is, on the tech side, everyone owns their own products. So they feel the ownership of the product. I think a lot of our folks on the tech team think they are more like ethical hackers than really software developers, and the business gives them the opportunity to be that, right? And we as a business have never had, because we don't have investors, we have never had this pressure of growing fast. So none of us, no one in the team has a revenue targets or target to have a product by X date, or so no one's really working on any targets, right? And that freedom that you get is invaluable. A lot of people who probably have worked in this pressure of being under targets all the time, they'll probably understand that not having those targets is very good. And also the strategy as a business for us has always been that we've always hired freshers or people who are just starting off, and we've actually helped them grow, and we've put in a lot of time and effort in helping them grow. So a lot of these people are also, I think, feel like family, today, because they've grown along with us. We haven't really poached people from other places paying more. I mean, we haven't really done that as a business. So I think all of those things have really helped, keep the team together.
Great, actually, because just reiterate our belief that people leave the organization not because they're paying less compensation or poor working environment. They leave it most of the time because of the leader. I think you have been a great leader. You're able to retain them. Congratulations on that. And here's a question from one of the professors from Sudalai Muthu. What he wants to know is more from the management student angle. What are the self-employment opportunities available in fintech areas in future for youngsters, the young MBA graduates or otherwise? And what are the challenges you have faced and how did you overcome these challenges? It could be a masterclass lesson for the students, a few tips.
Yeah. No, the thing is, in India, right, I think Shankar would know this well, as in uh, while the market ecosystem is growing, one of the things that hasn't grown is really, the advisory ecosystem in this country. Today, most people who distribute financial products are also making money from manufacturers. There is conflict of interest. There isn't, the quality of people advising isn't really as high. So I think there is an opportunity which will open up over the next 5-10 years for advisors in India, like how in the US. Most of the business is actually advisory first. Everyone, like the way they have a doctor, a dentist, they also have an advisor, a financial advisor. I think eventually India will kind of get to that point where Indians will say, what, I need to ask my financial advisor before I do an investment. So I think if there is MBA graduates, etc., looking at capital markets, I think building a career around advisory kind of business is a good idea. And personal challenges. I'll take me an hour if I were to say all my personal challenges and how I got over.
Write a book on this. I think do that. Actually. Yeah, I think maybe should have a platform to launch this book. Here is a question which has come from Raghunath from YouTube. He says, last month we saw how leverage trading blew up in the US. Many retail investors are also involved in heavy leverage options trading, which is ticking time bomb. Do you think a similar blow up could happen in India, or are these sufficient safeguards to meet these challenges?
No, I think what happened in the US, I think he's referring to GameStop, the stock, is a joke. I mean, I think it's a joke. Like SEC itself is a joke to have allowed such regulations that allows for a situation where a company's stock can be shorted the way it was shorted in case of GameStop. I think SEBI, like I said earlier, has done a fantabulous job in terms of regulations and safeguarding retail investors' interests. I think the leverage is like, for example, nothing that happened in GameStop can happen in India, right? So that way we are protected. But there are people who trade options. So there is not a GameStop type of risk, but people trading options is a risk. It's a risk for that person who's trading the options, because futures and options are a high risky product, and a lot of people get carried away by greed and end up trading in options, futures and options. So the advice I typically have for most people who are starting off futures and options is trade with only money that you can afford to lose, and increase your capital only if you're consistently profitable.
So Vijay, there are a couple of questions here that have been sent to me as a DM. So Ramki wants to know. Ramki is from Spark Capital. The essence of his question is, what does competition think of you, and how are you handling competitive issues, if any?
Right. Yeah. No. I think this over the last 1 year, I think thanks to Robinhood's valuation going from 5 billion to 60 billion, a lot of venture capitalists have funded a lot of our competition. So like I was saying earlier, right? I think this business is about product, right? As in, I don't think whoever has a better product is going to win this game, right? And more money doesn't really guarantee that you're going to build a better product, right? Because building a broking platform is actually a lot more complex than even building a bank, like a backend of a bank, because everything that happens on a broking platform has to be live, has to be instant. Like today we did I think like 12 million orders today, completed orders. Today was our biggest day in terms of business, right? 12 million orders in a 6-hour window. I don't think you really, I mean, just the technology stack that powers all of this, without,
Amazing.
and it has to all happen in a microsecond, right, as a millisecond. So I think we have a little distance on our competition in terms of our product, right? We think at least a 2-3 year distance, because we started building early, right? As in we started our product journey in 2014 and our competition started in 2017. And our product has seen different cycles. So we've had that scaling issues. We have learned from our lessons. And so all of that has made us reach here today. So if someone has to catch up on that, he has to kind of evolve. He has to spend time. He has to understand.
No, I think you're also discounting the strategic ownership of technology, which I see is a big differentiator for you. I don't think the really big banks and other owners of trading platforms, they will not be dealing with technology at the strategic level. They'll be dealing with it at the technical level. So that is a very big difference, I think.
No, I don't think the traditional guys are any more competition for what we do, right? I mean, they can go build a great advisory first business, right? Kind of business that we focus on. I think our competition will really come from the newer guys, I mean, right? So the newer platforms, so who don't have that technical debt, who are thinking more like us, which is product. For those folks, the product has to evolve, right? As in, they can't just get up one day and say, I'll build Tesla Model X. It has to take.
How local is your business? Can you take this platform and adapt it or use the learnings from this to start operating in other markets for domestic? And of course, the other question that's there on this chat box is, why are you not offering international investing to Indian investors yet?
No, I spent some time, I went to the US and we thought we'll take over a US broker and kind of take the user experience from here, and just somehow make it magically work for US. But we realized that can't work like that, because the underlying technologies, exchanges, the depositories, the clearing, everything is different, right? So while you can make Kite, like the trading platforms look very similar, the underlying infra is completely different. So it has to be another Zeroda built afresh. It can't really replicate what is built here there. So we said it's not really worth the time and effort, and we thought the opportunity is really in India itself. So we kind of didn't go after this. Allowing US stocks, the reason we haven't done it already is because the cost of remittance is too high. I mean, it doesn't make sense for offering a product where a customer has to pay 700,000 rupees as payment gateway costs, lose 1% in spread. Then the other guy on the other side charges another $1,000 to receive the money. Right? I mean, when you're dealing with customers who have 1.5, 2 lakh rupees and lesser,
doesn't make sense.
It doesn't make sense. I mean, so right now we're trying to solve for remittance. The day we have a way to allow people to send money out at much lesser cost, we would offering US stocks is actually the simplest thing to do, because you just are plugging on top of a broker. So you're essentially using APIs like the way our Kite Connect APIs are. So it's that's not really.
Understand. Vijay, back to you.
Yes, there's a question again from the chat box. A couple of them I'll take it when I move to. A lot of questions that come on from the YouTube and Facebook. Mr. Arun wants to know, Mr. Nithin, your perception on the Dogecoin bubble. And also Mr. Ramkumar is a past parent. I mean, he also wants to know, your enthusiasm is infectious and great interview. Can you please explain in simple terms the purpose and vision of Zeroda?
Right, thanks. No, like I said, I have no understanding of what crypto is. And Dogecoin seems to be like the mother of all speculative assets out there, the way the coin prices are moving. So so I mean, I think it's like one of those tulip mania types, like the dot-com boom and bust, so it's going to crash one of these times. It just, unfortunate bit is when it crashes, I think a lot of retail people will lose money, right? There is no way stuff like this can continue for too long, right? About Zeroda's mission, vision, it's kind of changed over time, like I said earlier. I think today, if you were to ask me, it is about finding ways to help people do better with their money. So it's kind of, it's taken different courses, different times, but today that is it. Today is to help people do better with their money.
Right. Here is Amit Dogra from Mumbai. What he wants to know is, in the IPO market, we have seen many issues getting 100 times subscription. Do you think such a exuberance and initiative is healthy for the market, or is there something fundamentally wrong? In relevant to there, another question from Pondicherry is the market behavior unjustified when the rest of the economy seems to be falling apart?
Yeah. No, man, like I said, right, I think the only real way you can justify what's happening to the stock market is by thinking that the value of money is depreciating really, really fast. So it's not stock market going up, but really the value of money going down. I mean, that's the only way I can really come up with reasons. And also, if you look at how people are valuing businesses.
But that's a very scary thought, no? Because people who don't have the money to invest in such assets are really going to lose their shirt totally, right? The middle class and Anyway, sorry, I interrupted you.
And so in terms of, this how people are valuing businesses, right? There is a valuation premium to be the biggest in a vertical, right? The top 1-2 in every vertical is getting valued much higher than everyone else, right? And there is a valuation premium on growth, right? If you're a business that's growing fast, people are ready to value a lot more than any price to earning multiple can capture, right? So I think the way the really rich folks on this planet are valuing businesses moved away from the traditional ways of valuing businesses. So I think we just have to adapt and move on and kind of start valuing businesses the way they value it. Thank
you. Here's a question from Ms. Jayaprabha in the chat box. As you know, from this year, SEBI is going to cut the leverages, no extra cost. So your broking income will reduce substantially. What's your plan to increase your profit under these circumstances?
No, I mean, the way we are looking at it is, while the broking income might drop, I think lesser leverage will mean that customer will survive longer, will trade for longer period of time, because usually in the active business of trading, higher leverage is usually always equal to people losing money fast, right? So with no leverage, I think while short term it might be bad for the business, but if people are trading, investing for longer, it is good for the entire ecosystem.
That's a great insight. I think that the great leverage means that people will lose money fast on the average. I think is a great insight.
Here's Arun from Salem. He says, I'm invest small amount in trading, and most of the time I make a small margin. How do you think the second wave of COVID can impact the financial stocks?
Okay. No, I mean, so it's like I said, right? I mean, it hasn't yet impacted, but I don't know why it hasn't impacted. Like, I'm as clueless as a lot of people are. I had even, it's tough to say. I don't really have an answer for that.
Yeah, we go with you. Here, Mr. Venkateshwar, what you want to know is excellent model is again come the chat box. You could also must have read it actually. Excellent model and presentation. No doubt, Zeroda has disrupted and brought down the transaction cost. But compared to the developed markets, it is still high, not including the levies. What's your view? The second question is that your platform is not really free. So is it zero a real misnomer?
Right. So the thing is, if you were to look at our platform, say Zeroda, actually India as a whole, and compare it to international market. See, we Indians have this problem of always looking west and thinking they're better than us, right? Irrespective of whatever it is. And I can tell you, at least in terms of financial markets, our capital markets, actually much safer for retail investors, right? It is much better in terms of the products and platforms. I mean, like a demat account, right? Just a simple concept like this, you don't have a demat account, right? As in, like when you in the US, if Lehman Brothers goes down, he takes your stock and goes down. I mean, and stuff like that, right? As in, so I think if you were to look at costs at Zerodha, apart from, of course, is security transaction tax, stamp duty, all of this is required. I mean, that's a statutory levy, so you can't get away from it. But otherwise, cost-wise, we're actually much cheaper. In the US, while there are brokers who give you a little bit of, like there are brokers like Robinhood who's zero on everything, but the kind of money, the way they make money is actually a very unethical way, right? Which is a lot of these brokers sell your order flow to high frequency trading firms. That's how they make money, right? In India, when you place an order on Zeroda, the order has to go to the stock exchange. It can't go anywhere else. In the US, when you place an order on Robinhood, it goes to a high frequency trading firm, right? Who's paying money to the broker to buy that order. I mean, do you want to pay brokerage and get the order to be matched on the exchange, or do you want your order flow to go to the exchange, to a high frequency trading firm for free, right? I mean, it's a no-brainer, right? As in, it's so yeah. So I think it isn't. I don't think it's really a apples to apples comparison, comparing, saying, to the US market, because the US brokers are making money in different ways. Secondly, in terms of Zerodha, Zerodha was never zero brokerage. It was actually always about zero barriers. And this whole zero brokerage, when we started the business, we were charging 20 rupees per trade, right? And in 2015, we went zero brokerage for equity investing, right? And we continued charging 20 rupees per trade for futures and options and intraday trading. The reason that business, you need to charge a brokerage, is because we take risk on every trade, right? Every person, when he's speculating with us, he's trading with more money than, with 100 rupees, you're taking a 200 rupee risk, right? So it's almost like running an insurance business. You can't run an insurance business without taking a premium, right? It's a, but just to make it clear, Zeroda was never zero, brokerage was never the name, it's actually zero barriers, So.
Vijay, one
Yes,
last question for you, and then I have a last question.
Yes. Here is a question again from Raju from Chennai. He said, every few weeks, Zeroda trends on social media because of technical disruptions. Traders complained of losing money due to them. So why does it happen? And you mentioned your thing and what initiative you're taking to fix them. It doesn't happen. You really mentioned your presentation.
It's what is called as selection bias. So in the last 1 year, we were down for 45 minutes in all, in the last 14 months. And the last 14 months is really the
highest
most activity we've ever seen. I mean, we have been tested in terms of every way, right? I mean, like I said, there have been 5-minute durations intervals where we've had 2 million orders being placed and things like that, right? So, and at 45 minutes, I think we had lesser downtime than all the top brokers by at least 80% lesser. So you can take the top 10 brokers in India, and if you were to look at their downtime, because we actively track every single platform of ours. Should it have been 45 minutes? Could it have been lesser? Of course, it could have been lesser. And right, but like I've said before, I don't think anyone, right, be it WhatsApp, be it Facebook, be it Apple, Google, a lot of people think somehow you spend more money, you can have less downtime. It doesn't work like that, right? If adding more servers meant that we'll not have downtime, we would have added servers. I mean, it's not like servers are not what causes, because that's usually what a lot of people advise me, like saying, Nithin, why don't you add more servers? I'm like, dude, what are you saying? So, yeah, so it's, but we trend because most of our audience is 20 to 35 years of age. We trend because we are almost 20% of India's retail markets, right? So the remaining 80% comes from 300 odd brokers. So we are 20%. So, so you're such a big fish in the pond. So, something happens, people spot it, and then we also trend because a lot of people realize that on social media they get a lot of a lot of activity on their own posts when they tag us, and when we are having issues. So, but we have social media is a double-edged sword. We have benefited out of it, but when things go wrong, I almost jump off a building. So.
We have over 2,050 viewers watching the program live, and many will watch on YouTube. And before I request Shankar to take on, there are a number of questions come from many of the viewers on similar lines. That is, you are a man of stock market. It would be a shame if I don't ask you this question, sir. What do you think about the current market trend? Is it a bubble or a burst?
No idea. No, I mean, is it overvalued? It could be. But then, there could be long periods of time when stock markets are overvalued. It's like someone was telling me during the Second World War, like US was actually in a mega bull run, while their soldiers were dying and all of that. So it's unfortunate, a market's very heartless of sorts, So.
So my last question to Nithin. I want to go back to your philosophy on capital, particularly external capital. We have presumably a number of entrepreneurs on the show. Now, it could be that the type of business you start is the type of business which is not inherently profitable, which has a long gestation period before it generates revenue and profits. And so you have no choice but to keep raising capital till you reach that hurdle. But then again, as you pointed out, raising capital from external investors is like sitting on a tiger. There's no getting off. There's only one way of getting off. Was it a thought through sort of effort on your part to be profitable and so on? Could you have gone another route, perhaps, of raising capital and reaching this 5 million customers very fast? Or was the market not conducive? Or, was there an alternate route open to you which was capital led? And did you actively choose not that route? Or did it just happen that you were doing it this way?
Right. No, I mean, it was, we started off accidentally without having to, like I said, we were very raw as a business. So, I don't think I keep joking about it. If I was a VC, I wouldn't have invested in myself, in 2010. But, by 2012, 13, we had started making a little bit of money. And that's when VCs, started showing interest. And at that point, we didn't need the money. I thought, what will money give us, right? Because as a business, one of the reasons we've been able to stay away from capital is because we haven't advertised till date. We've spent 0 rupees on marketing and advertisement till date, right? Because there is no other, if we had to spend on marketing and advertisement, we would have had to raise capital. There's no other way we could have done it, right? Because most businesses today, the reason they raise money is because they have a CAC of, X dollars, right? We actually make money on every customer. So we charge an account opening fees of 200 to 300 rupees. So every customer who opens an account with us, we actually make money, right? So there is a CAC. And this is how it has always been from day one, right? And now, but not every business can be like this, right? The reason we could charge an account opening fees was because we were always ahead in terms of a product on the competition, right? But if the products were very similar, now you have to go deep pockets. There's no other way to win it. I mean, if 2 products are really similar, whoever spends more is going to win that race, right? So I
think that's the point. I think that as your summary, would you advise entrepreneurs that they should be product first, customer first, and create such a great product that the customer demand is there, rather than use a lot of money to acquire customers at high prices and try to sell them whatever you have with you?
No, absolutely. I mean, it's a no-brainer, right? It's just that I think over the last few years, with so much of excess capital in the ecosystem, I think people have forgotten that basic fundamental thing about building a business, which is you need to offer something which is better than someone else, right? And that's how you grow, build and grow a business, right? But in this whole rush of VC and PE money, I think people have gotten to this thing of just trying to beat a competition by raising more capital and burning more money than that other person, right? So I don't think it can survive for too long. I don't think those cycles will run for too long. But you're right, absolutely. I mean, I think being product first, customer first is also very satisfying for founders as well.
So on that note, thank you so much, Nithin. It was a pleasure having you on behalf of MMA and all the audience. We are thrilled to have you with us and really enjoyed this session. Thank you. Over to you, Vijay, for closing remarks.
Thank you, Nithin. Fascinating evening. In fact, you answered the question which has come from Bangalore. They say when Upstock is spending so much of time in IPL and advertising, is it time for you to consider to do an ad, which you answered. All the viewers must be really happy because so many questions you really taken them. It's a fascinating evening. I think the large number of viewers will immensely benefit from the insights and will also get inspired. Those who are sitting on the fence will take a jump to start investing. Thanks so much. As I mentioned, over 2,000 viewers are watching the program. Many will watch on our YouTube as a token of our appreciation on behalf of Mr. Shankar, on behalf of the entire management team. We would like to, this is what we could do during the time. And when you come next time visiting Chennai, you must visit our State of Art Management Center. We would like to host you there in person. And we would like to present on behalf 200 face masks and also some 100 mini sanitizers to all the poor needy people who really need this time till the vaccination is done to 100%. Thanks so much, all the viewers who watch this program live. It's fascinating to get you over and keep watching and keep enjoying, keep participating in all the quiz program which we are going to share with you every day and all the events which we are organized exclusively for you during the lockdown. Stay safe, stay healthy. This is the time we have to be very, very careful. Just because some of the people take 2 jabs, I'm free, don't take any chance, and better to stay at home so that not only you save yourself, and you don't create any agony to your family members and also to all the people around you, all your friends. Because I've seen many of them in MMA, many members losing their near and dear, as Mr. Shankar mentioned in the beginning. It's really, really sad to see some of your close friends, even in armed forces, have been impacted quite a bit. And it's better not to take a chance, stay home, keep watching MMA programs, keep yourself busy, getting into Zeroda, start trading. So much of input you got it today. Thanks so much. And
thank you, Nithin, for one of the best sessions
Bye-bye.
we have had in recent times. Thank you. Bye-bye.
Bye-bye. Good night. Thank you, Nithin. And also thanks to Mr. Somnath. You have been a great source of support to us. Thank you, Somnath, and for being a great support to us.